Here, the banks are again having to defend themselves over their decision to independently raise interest rates. The French bank Société Générale says the rate hikes were to protect profit margins, not due to higher funding costs, as the Big Four have insisted. Finance correspondent Philip Lasker.
The banks have been making the case for putting up interest rates as strongly as possible.
Writing a new home loan was not profitable. That's not a good position, a sustainable position for a financial institution to be in.
But blaming it on rising global funding costs didn't wash with Société Générale's interest rate specialist in Asia.
It doesn't seem plausible with public data. It is more likely that it is related to the fact that banks are trying to protect their profit margins.
Société Générale argues that banks now get 2/3 of their funding from local depositors, more than ever before. And with the help of data from the Reserve Bank and the banking regulator, it found almost every source of bank funding has continued to fall since the second half of last year in absolute terms.
It became pretty apparent that as a whole, the industry could not really be suffering under the strain of sharply rising funding costs.
It didn't go down well with his Australian banking counterparts.
I have to say, being lectured about how to run our banking system by a French bank is a little more than ironic.
There was less shooting of the messenger from the Reserve Bank Governor Glenn Stevens, who was forced to endorse the domestic bank's behaviour.
Relative to the rate we set, the funding costs have gone up a little bit because they haven't fallen as much as the cash rate. And that is a fact, and the banks have responded to that in a way that you would expect they would, I think.
That suggests the RBA governor is happy with this month's rate hike because, as the latest Reserve Bank board minutes show, Europe's threat has eased. Philip Lasker, ABC News.